prices have changed. All right, after hours or after market closes today, okay, we have booking, which is the old price line. All right, let's get a whiteboard going here. Stock is 1725. Okay, the expected move here it's still right around $90 to $95, right? What I had talked about on TD. Okay, everybody see that? Got it right around $90. Okay, so that puts us then at a range of 1635 up to 1815. Now, if you look at the chart here, and the stock has changed a little bit actually since even I was on just a couple minutes ago. There is really, really big support here in that 1650, 1640 area, just like I had talked about. And the 200-day moving average is at 1845. So you've got really, really decent support down here and really, really decent resistance up here. Yes, that is beyond what the expected move is. However, if we can find something going out to those points where our reward to risk is still, appropriate, bam, I love that. Okay, so great support around 1640 and resistance above at 1840, which is the 200-day moving average. So the iron condor I was looking at, or that I talked about on TD, was this right here. Now that market is not $5 anymore. It was $5 when the stock was trading higher and these strikes were a little bit more appropriate. If I adjust this to the range that we're expecting, what I would do is lower the upside strike to that. Okay, that gets us a little closer. That puts at least the midpoint at about $4.70. Okay, you can't look at the midpoint that's on the screen here. Why? What is this market that is on the screen? What's wrong with that market? Why is that market not accurate? Liquidity definitely could be an issue. Absolutely it could. And that's why we're seeing that unbelievably super wide market. There's no question about that. Okay, so I love this setup. I do think liquidity could be a bit of an issue. So I'm not sending this out yet. I want to look at some other potential opportunities. But just so you guys know what I'm looking at. Okay, that is what we're looking at. Any questions on that? This would be a credit spread, absolutely. Yep, exactly, Kevin. It's exactly what I'd be looking at. There's the strikes I'm looking at. And this is what's really going to come down to is, can we get in and out? All right? Does everybody see that? Well, the in a perfect world, Kevin, yeah, we'd love for all the legs to expire. That's not really how we go into it. But yeah, in a perfect world, that is what we would love to happen. All right? What do you mean, Kevin? Michael, remember, as I said at the beginning of this conversation, this was what I used. This was what I used in my example on TV because the stock was trading $20 higher. So the strikes on the upside are also off considerably. Okay, if I adjusted this to about where we want it to be based on where the current stock price is trading, we might do something like this. Okay, so let me finish this up. Okay, iron condor is great, however, may be an issue with liquidity.